Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but as always, we need to cover off some important housekeeping details about the session. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or certainly feel free to take a screenshot of it if you like. That's the main point to take away. All right, so for this session, as always, we are live streaming to multiple different platforms. It'll be Twitter, of course, our Zoom audience, Facebook, and YouTube, of course. So we will have a question portion at the end. It will be brief, and we'll take questions from all of those different platforms. So Rob goes through his general presentation, does some case study considerations, and then with the time remaining, we'll pass through some questions. So just know if we don't get to your question, it has nothing to do with the validity. We just only have so much time. So with that, take it as encouragement to attend the insiders meeting when there's a 45-minute session solely based on answering questions for subscribers. So obviously a much higher likelihood of getting your question addressed there. Any support related queries I can handle in the chat window, so please be sure to write anything along those lines in there. Also, for any interaction amongst other attendees, please feel encouraged to use that window. Just note that by default, it changes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change it to everyone. All right, I believe that covers off all the important details of the session. So if you're listening to the analysis from the experts on Friday, a lot were saying that the selling was overdone, but Elliott seems to have gone the other way. So I'm expecting to, I'm looking forward to hearing Rob's thoughts rather, and his analysis as always, and also interacting with you all. So thank you all for attending this session tonight and joining us live. And at this moment in time, I'll introduce who we're all here for. That's Rob Roy.
Thanks, Zach. Hello, everybody, and welcome to TradeFinder Live. This is your first time attending. We'll go through and talk about the markets. As Zach said, lots to talk about with the Federal Reserve's comments or Chairman Powell's comments on Friday. Then we'll review any case study alerts that we have sent out to our alert subscribers at Elliott Wave Options. That's ewotrader.com. We'll look for trading ideas. We'll review past trading considerations that we've done in other trade finders, update those, and then we'll look for one this evening. And with whatever time's left, Zach's covered off how we can go through the Q&A at the end. So that's it. That's how TradeFinder works. Welcome to everyone that's viewing us from the multiple social media platforms. What a difference it is from the times that it used to be when we would do live seminars. Now you only have to look at me through video. You don't have to see me in person. All right, so taking a look at the market, you can see that we had that big, huge down day on Friday, and that was when Chairman Powell came out. And boy, if you looked at our market update over the weekend on our YouTube channel, and for those of you on YouTube or whatever social media platform you're viewing us on, please go to our YouTube channel at Elliott Wave Options. We talked about how he was more hawkish than a hawk. We went to peregrine falcon, which is one of the meanest birds, most feared birds that exists out there, because he said they're going to inflict some pain and they're going to use every weapon that they can, basically maliciously, to stop inflation. I thought it was a pretty stern warning to the markets, but yet Zach alluded to this, that a lot of the market pundits felt that the selling that occurred on Friday was overdone. But then you can see what's occurred on Monday and Tuesday of this week, continued downside, moving lower. I did see a few people that, sorry about that, I thought the video had come on. Some people felt that maybe, or a couple people said it may be 390. So we'll see if that holds. Looks to me like the first point of really support in the market is more like 380. And then we see from there. And if we take a look, I'm going to come back to this chart in a second, but if we take a look at the VIX, yeah, we've had a little bit of a move to the upside. Look at today, though. not much in the world of volatility, but then you go back and looked at, that was a pretty significant downward day in the market, finishing down over a 1% on the markets, and the VIX did nothing. Yikes. I think that sets us up for some potential really selling to the downside. We'll see how it all plays out, but I don't really see any support past this 400 level until we get down to 380. I don't even really see that area in 390 that people are talking about. There's a lot of bouncing around here, and I guess if you wanted to, you could draw a line through here and say that there is some support resistance at 390, but I feel like breaking 400 is the key. So we broke it today, and as you know, one day doesn't mean anything. You have to have a second day or a follow-through day. We have had follow-through to the downside, but breaking through 400 and having some follow-through would be more meaningful. Right now, the futures are up 9, which is nothing. As you know, we are a tiny bit oversold from the 10-day moving average. And so a little bit of a bounce up, maybe even a bounce back to the 50-day moving average there, around 410 or so, would be warranted. But that would have to be on some pretty significant volume for me to change my view. Right now, it looks like Elliott Wave has it nailed pretty well with this move lower. Now you can see we do have a small zigzag here. So let's take a look at that and see where that forecast is. And the 61.8% level there at 407 was where you're supposed to go. So we've already gone beyond the extended level at 100%, close below that. So if you're going to go lower than that, you really need some serious support from other indicators. When we look at the DMI, the ADX is trying to curl back up, but it hasn't yet. Although the negative directional indicator is showing that sellers are in control right now, but we would need to have that ADX turn back up in a more meaningful way. But to me, the most telling thing is the fact that the VIX is not, I mean, considering the selling that we've had since Friday, and the VIX is at 26, it's not up at 30 or 35, means that we are ripe for more selling. Nobody is really too concerned about the selling that we've had so far. So we'll see how this plays out over the next few days. But so far, I mean, none of those pundits that they interviewed were on today. Interesting how the networks do that. But a lot of them were saying that selling, that big spike that we had down on Friday was overdone. That was too much. But this is where it's really important when you're listening to those guys on TV, understanding that they're investment managers and they really want you to keep their money, keep your money with them. And so they tend to be bullish the majority of the time. Oh yeah, there's some selling coming, but this is a good opportunity to buy, put more money in, stay with it, etc. Because they don't want money leaving their investment funds, because that's how they get paid, is assets under management. So as long as you're aware that they have ulterior motives when they're talking, you're okay. But keep that in mind. So it looks like to me this wave 5 is underway. Will we go down all the way to 350 or lower? Well, we'll have to wait and see. The markets are going to do what the markets are going to do. But so far, they've done more than what people thought. And the Elliott Wave pattern has been spot on. Some of you commented on the last market update that you had made trades that you guessed and second guessed and third guessed, and we're thankful for seeing what Elliott Wave showed and have made some money on this downward move. So, you know, if you're new to Elliott Wave, know that so far it's following exactly what the Elliott Wave pattern is showing. But again, we'll see where it goes from here. But there's that VIX at 26. That's not a market bottom. Following that, we've talked about how long we spent up around 35, and I gave you the boxer versus puncher mentality on whether or not just consistently pounding the 35 level was the same as the knockout blow from a big strong puncher, meaning that we would get a VIX up around 40 or so. And it seemed that way as the VIX was coming down, and it got to 20, based a bit, and now we've moved back to the upside. But to me, it's a bit scary that we've had this sort of a move to the downside without really any sort of significant bounce higher in the VIX. You look at interest rates, and interest rates are not spreading to the upside, even with Chairman Powell's speech on where they're going to use their tools aggressively and all the things that he said. And why are interest rates not moving up faster? It's because money's leaving the equities market and going into the bond market. Remember, with bonds, prices and yields move in inverse direction. So as prices go up, meaning as people are buying bonds, prices go up. It's supply demand like any other security. So as money's moving into bonds, the price goes up, which means yields and rates go down. So even though the Federal Reserve is, I mean, he basically came out and said, yes, they are going to withdraw, lower their balance sheet, reduce their balance sheet. And yes, they're going to continue raising rates. They're going to do the double whammy that we put in our report a couple of weeks ago, which some of you were wondering, what's the double whammy? That's what it is. But the fact that interest rates haven't sprinted higher is because money's moving into bonds, and it's offsetting that to a degree. So there's demand coming in, and that's helping to stop the move to the upside. I wish we could show volume there, but it doesn't reveal on this ETF. But looking at movement above 30, I just think, look where that wave 5 is. Can you imagine where the market would be if rates go up that high? Well, perhaps the market will be down here where the wave 5 is. So we are, again, a little bit oversold. Perhaps we get a little bit of a bounce, but I just think that at this point in time, you have to be short until we break back above 420. If we break it back above 420, then the thesis changes altogether. But until that occurs, it looks like the smart play is to be on the short side. The dollar consolidating here right at the wave 5, which to me means that there's still more upside. We looked at this in the weekend update, this big zigzag pattern that we have here, where you can see that the dollar could go all the way up to 112. That's not going to be bullish for the market in any way, shape, or form. You've heard me say numerous times, I am a fan of the strong dollar, king dollar, as Larry Kudlow used to say, but not this strong, because when it gets this strong, it hurts international companies because of the exchange rates. So getting this high of a dollar is detrimental to those companies and their bottom line. So, I mean, that's where we see the markets in the S&P. Let's look at the rest of the markets. The Dow, you can see that looking at the diamonds, breaking below 320, I think was key there. That was a bit of support resistance that was broken today. And there we go again with tomorrow matters, whether we get a follow through or confirmation day. All the markets are about to have a negative 1030 cross. It hasn't occurred yet, but they're all back below the 50-day moving average, which is key. And so the next level support, if we do get follow through on the diamonds, is 300. That's what you want to look for there. Looking at the Qs, take a look at the Qs. I've talked about this so many times that they're going to underperform, especially now after Chairman Powell's speech. A lot of people said he looked mad in his speech. He came out, he was very decisive, and it was an 8-minute speech, one of the shortest speeches any Federal Reserve chairman has ever given. And he just came out and said, this is what we're going to do. We're warning you, be cautious. We don't care what we do to the markets, and we don't care what we do to the economy. We are going to stop inflation. And if their mandate is to get it back to 2%, as they say, it could get really ugly. I just don't know they get it back all the way to 2%. At some point in time, the economy may be in such bad shape that they have to start QE again. There was some comments on the YouTube channel about, will we ever see QE again? I think so. I think the Federal Reserve is going to go too far on the tightening, and we're going to have a major reverse. You may have heard me say this before. I think we're going to have a scenario where we have one meeting where they're tighten and the next meeting where they cut rates. They've done it before. I think that happens. And we've shown this in the past as well, that when this wave 5 ended, You look for a 61.8% correction. If the wave 5 extended more than 100%, it extended 118%. Look where it went to. How can, you know, the people that poo-poo Elliott Wave just aren't paying attention or haven't taken enough time to learn? On our website at ewotrader.com, we have volumes of information. We really pride ourselves on the education that we put out there. Go through, look at the videos, learn how Elliott Wave works. This is one of the rules. So you go to 61.8, you have a doji, and look what happened since then. Just exactly to the T what was supposed to happen in the markets. So looking at the Qs, moving lower here, and now we're down at 300, and thought that that would be the first point. Maybe we find some support there. Again, we're oversold on the Qs, so maybe we see a little bit of a bounce tomorrow. If we don't get a bounce tomorrow, holy cow, I think it's Katie bar the door. It could really get ugly from here. Looking at the IWM, well, as you would suspect, we are back below that 190 level. And so we've broken below it. And now you would have to look at, all right, where's the next level? Well, the wave 5 is way, I mean, that one would kind of surprise me if we see the small caps get that low. But I do have to feel that 170 at this wave 3 low is in the cards. So we close at 184. We're not quite as oversold, a little bit, so we could bounce back to 190, but we did break below the 50-day moving average here as well. So we could bounce back to 190, but unless we get back above 190, I think 170 is in the cards there. And then looking at Bitcoin, if you see the chart of Bitcoin, we broke that key 20,000 level. Now, you can see that there's a doji, and I know we talk about this because people bring it up all the time when I show a end of day chart on Bitcoin. It trades 24/7, but you do have a point where there's an end of day spot so that you can look at it from end of day charts, daily looking charts. And we had this ascending triangle pattern, and I've said this numerous times as well. An ascending triangle does not mean you're breaking to the upside. We said there was going to be a 4,000 point move. That's down to 20,000. We got there. We have a doji there today. Maybe we actually trade back higher. At the time of this recording, we are below 20,000, but we'll see what the next day or two brings. I can tell you that Bitcoin bulls are going to try to support this level, because if we break 20,000, then it's, I mean, people are talking about 12,000. And if you're wondering where are they coming up with that number, that's why, because back last year or back in 2020, August, September, October, all through that time frame, 12,000 was the key before it took off. So are we going back there? If we don't hold 20,000, I think 12,000 is a realistic possibility. So they're going to probably try to bounce it off this 20,000 level. We're not that oversold from the 10-day moving average, but we traded as low as under 19.5 today, but happened to close just a hair under the 20,000 level. So we've had the breakout. If you're bullish Bitcoin, the best thing that you have to hang your hat on is once you have a breakout of a triangle, it gets retraced. So we will move back to this 24,000 level at some point. It doesn't necessarily mean it's right away. It's just like filling a gap. You know it's going to get filled, but when? Sometimes gaps get filled immediately. Sometimes it takes a while. Same thing with the retracement of a triangle breakout. Sometimes it retraces it right away. Sometimes it takes some time. But they will try to hold the line here in the 20,000 level. We'll see if they are successful and able to do that. Looking at Australia, EWA, and we have talked about the fact that we had broken above 22, and then 23 was the next level. Could we get above there? If we got above there, then you had something going there in the EWA, and we couldn't do it. We tried early on Friday, but unsuccessful, got turned back. Now we need to hold 22, because if we don't hold 22, then we're going right back to 21. If we can't hold 21, then I think this wave 5 forecast has to be taken into consideration down around 19 or so. But right now, 22 is the key. Try to hold that. If not, there's nothing stopping it from going to 21. You can see that you've got this 45-degree angle here. There's nothing in the way. Nothing's going to hold it from going down there. So EWC for Canada, take a look at the Canadian market. Pretty ugly day there. We lost 35, which needed to hold, and it didn't. And so you look at that, and now you say, yikes. I mean, there's a little bit of support at 34, but we're probably coming all the way back down here to this support at 33. Maybe we get a little bounce first, but you can see the high was pretty close to the 10-day moving average, so not significantly oversold on the Canadian market, but that was pretty ugly the way it broke 35 today, and looks like more downside to come. Looks like the Federal Reserve is going to get what they want. Pain. That was their words. Pain. Reminds you of the Rocky movie, right? With Mr. T. What's your forecast for the fight? And he said, pain. So that's, I don't know if Chairman Powell channeled his inner Mr. T from Rocky or what, but he pretty much used the same type of rhetoric. So looking here at 43 on the India market, still one of the best performing markets. How can you not pay attention to what's going on here in India? Really impressive that we're up today there, even though we finished on the lows, still we're higher. And if we could somehow get above the wave 4 there at 44 on the India market, disqualify this 5-wave impulse pattern, we're going to easily be back to 46 in a short period of time, and maybe higher from there. So if you're looking for a place to hide, at least for now, that's been the place to be. We've commented, I don't know how many times, on how impressive been with what's occurred in the India market. All right, well, now let's look at Germany, EWG. Maybe not as ugly as you expected, but we did have this big move lower on Friday, back up to the 10-day moving average. Really, at this point, all we've done is come back and test 22. If it can hold there at 22, then maybe we can mount something more to the upside. But if it doesn't, which it tried to break above it today and it didn't, if we fall back lower, I think 19 happens on the EWG. It just looks like a really good 5-wave impulse pattern to the downside to me. Changes if we hold 22 and break up, but even if it holds 22 from here and breaks higher, none of the thesis of the downside changes unless we get above 24. So there's room there where we could even bounce higher and move around and not change the 5-wave impulse pattern to the downside. At this point, to me, it looks like we're going to come down to 20 or below on the EWG. So I wish there was better news to talk about on the international markets, but my job is to read the charts to the best of my ability, and that's what I'm doing. And it's just, there's a lot of ugliness out there right now. That's what it's showing. So I thought we didn't actually close a case study trade alert on our website at ewotrader.com. So I thought I would show you, all right, in all this selling and all this ugliness, how are those time strategy alerts doing? That's our AI-based time strategy. If you want to learn more about it, go to our website. They're kind of look for stocks that make a big move lower and then stay sideways. Well, we've already have some positions on, and with the selling as heavy as it is, have they move lower? Well, look, I mean, we're doing pretty well here. We're up 15% on CAL. And there is a ton of premium they've put in the September options. It's really interesting how much premium. Go through and look just at the September options and see the amount of premium is in there. It's mind-boggling to me how much premium is still in there in the September options. So unless there's significant move lower here, all of these are going to start moving into profitability very quickly as they have to take that premium out the closer we get to expiration. But right now they're making you pay for September puts. Well, we've sold them, so we're not paying them. We've sold the September puts. But you can see that we're up 15% there, down 8%, 5%. ST&Es down 16, 17. And then we get to our volatility strategy, down 14% on TSM, Taiwan Semiconductor. Did you hear about what happened in Taiwan today? China flew a drone over there and Taiwan fired at it. It was a warning shot. They could have shot it down if they wanted to. They didn't. But it just seems like that's gearing up a little bit over there. Most people think China doesn't really want war with Taiwan. They're trying to say, hey, get in line and spank Taiwan a little bit. But Taiwan is being pretty independent and resistant to that and saying, well, do what you want. We're not going anywhere. So could that escalate? Possibly. It could. And then you can see we're up 9% there on CARG. The biggest one, RETA, has a ton of premium, even though the stock is right there at 20 in the September option that has to come out. And then down 11% there. So all of these time strategy positions are looking great with the amount of premium that's in there. So if you're looking for a strategy that even in the kind of selling that we've had since Friday that has minimal drawdowns, two of the positions are profitable with what's occurred since we entered them, then that's the strategy that you're looking for, our AI-based time strategy. So I thought I would share that with you. We're very open. We're as transparent as you can be. We post everything every single day. These are mark-to-market graphs that show you where the position is every single day. So I thought you might be interested in taking a look there. All right, so let's go back and review some of the previous case study considerations that we've had on previous TradeFinders. And we had this RS. We talked about this, how we had adjusted this. We sent this out as an alert to our subscribers, and we adjusted it to the downside, and 200 is our line in the sand. As long as we stay below 200, we're going to stay short, because I really feel like we're coming down to test this level here at 170. It's been pretty stubborn, moving up to 200, coming back down, testing it again. Big down day today, so nice move lower on RS today. Looks like perhaps we get down to that 170 level that we have been looking for. HCO, we looked at this back on May 17th, and you can see that we've just been in a trading range since then. It runs up to about 43 and runs into resistance and falls back down towards 37. If we break out of that range, we'll probably make some sort of a directional adjustment there. Mosaic, we looked at that one back on May 24th. We sent this out as an alert to our subscribers as well. And we had this triangle that broke to the downside. And then we moved back up. We retraced the triangle and we got back up here to 60. We've adjusted this to the downside as well. And we're breaking below that level, expecting it to come back down. I really think we see Mosaic down at 40, especially if the economy is going to weaken the way it does. And so AJG, we just looked at that one back on August 9th, and we said if it held 180. And so it did, and it continued higher, and it continued higher, and up to a high of 191. And then you look, now we're up to 192. A little bit of a move lower. Since then, back up there, you got another chance hanging in there. So do you want to stay in this? It's up to you, but you could have been out with a move of 12 points. That's a pretty decent profit with everything that's going on. So if you stayed longer than that, maybe you got a little bit greedy on that one. So I think we can go ahead and let that one go. KDP, now this is a different scenario here. You can see we looked at this and we're like, okay, it's Keurig, Dr. Pepper, could be in a defensive sector. It hasn't worked out that way. It's broken back down. To me, the key was breaking through 39 So I think with this one, you go ahead and close this out and take the loss. That's a pretty rare loss in the case study considerations that we've done on TradeFinder. Overwhelmingly profitable positions, but you know, if it isn't working, it isn't working. So to me, breaking through 39 with some follow through, we could easily see 37. There's no reason to hang around and see it get down there. So even though, you know, normally when you have a beverage company like this, it's defensive, and with the markets going down, that's the place to be. People haven't run to hide in there, as you would expect. So follow the charts. So I think you let that one go. And then last but not least, we had Southwest Airlines here, where we had a strangle that we looked at, which I think was important, especially in this volatility. And since then, you can see that we're trying to break to the downside, but haven't really yet. It's trying to sneak out lower. We have a little support there at 37. Don't take the call side off yet. Let it break below that. If it breaks below 37, then probably there we go to the downside. So it is trying to break lower for us, but I would hang in there on that one. I wouldn't let that one go just yet. All right, so let's take a look at our scans and see if we can find something that could be a viable case study consideration for tonight. Nothing in the impulse side that would make sense. 80 bearish wave threes and 161 bullish. Interesting there that there's not more to the downside, I think. So if you're looking for the markets to move back to the upside, that's something you can hold your hat on. And the VIX is at 26. I really don't like doing strangles with the VIX above 25, if you've heard me say that. But if we stay to that, then we don't have any case study considerations for tonight. So let's just see if we can find something. So I'm going to click the consolidating stocks. That's where we're looking for stocks that could be forming a triangle. Let's see if there's any that are in a bearish wave three, and there's not. So what I did was check both those. But if you're curious about this software, it's called Profit Source. You can find out more about it at hubb.com. To me, it's the best Elliott Wave software on the market. I've tried every Elliott Wave software program that I know to exist. I don't ever want to say I've tried them all, because there may be some I don't know. But there's been lots of comments on YouTube as well that people kind of think this is really cool, and also understand that a lot of software programs are people's personal adaptations of Elliott Wave. I prefer to stay exactly to the algorithm that Ralph Nelson Elliott wrote. So that's what this is programmed to. It's nobody's personal adaptation of it. Is it still not right 100% of the time? Nothing is, but I just think it's the purest form of Elliott Wave you can find. All right, well, let's see if we have anything consolidating in a bullish wave three. Aerojet. All right, well, let's see what it looks like. And it's held in there pretty well. Wow. I thought we were going to really struggle to find a candidate, but look where that ADX is diving. It's below 13. And when the VIX gets above 20, I look for 15 on the ADX. When it's lower than that, I look at 13. It's below 13, even with a higher ADX. So I'm not too familiar with this. So let's take a look at the options before we get too excited here. But we do have, I think that's a false breakout. I would draw the line here for the upper trend line there. And then there's your ascending triangle. And we go from 37 to 44, so 7 points. That's more than a 10% move. It's a 20% move. Let's take a look real quick and see what the options look like here on AJRD. AJRD. It's not a company that I'm really familiar with, so I don't know how liquid the options will be, but let's find out. Right, so not a lot of strikes, as you would expect. Spreads aren't that wide, and they have November options, which is perfect. So, we can use this. Huh. Well, I mean, options are growing so fast that there's even companies that I really haven't heard of that have options. It's not fantastic, but there's a trade to be had there. You could go out to April and yeah, it's not that bad. The spreads aren't that bad. All right, so that's going to be it. It's going to be our case study consideration for this week, and so that's going to be on 8:30. Another strangle. I think that makes a lot of sense in this market that we're in now. I'm pretty excited about that. Adding strangles. I'm a little bit nervous about the VIX being at 26. But the fact that the ADX is below 13 with a higher VIX kind of counteracts that a little bit. If the VIX was much higher, then we wouldn't have done this. But I think that's okay considering the break off there. I wanted to update you on this because I talked about this last week, that it was an arbitrage trade in the meme space where you looked at AMC and APE. And so the idea was, this is for all you on the different social media platforms. So the idea was that you would short AMC, expecting it to come down because they're virtually the same company, and you would go long APE, expecting it to move up. So that's where the arbitrage is. You would make money on the way down on AMC, make money on the way up on APE, and where they met in the middle, then you close the trade out. So the arbitrage is made on AMC coming down and APE going up. It hasn't happened. Actually, the spread is widened. So even that trade has, it's just so dangerous to stay, to play in that meme space. Please be careful if you're in there and dealing with that. But I shared that with you because that was on a lot of the financial networks and all the different platforms where people are chatting back and forth as an arbitrage play, which arbitrage is viewed normally as lower risk because you're long short. So far, that hasn't worked out. Maybe it still does, but for now, AMC has leveled off and APE has gone lower, so it's gone the wrong way. So that hasn't worked out at all. That's not been a good trade. So again, if you're playing in the meme space, just please be careful. And I wish you all the best. All right, with that, Zach, it's everything I wanted to cover off. So let's go ahead and open it up to questions.
Sounds great. Yeah, thanks for that great presentation, Rob, as always. And we have tons of great questions and comments coming in from all the different platforms. We do have a hand up from Paul, so I'm just going to say that we don't do voice questions for TradeFinder with the limited time that we have. So I do encourage you to ask your voice question on Thursday for the insiders meeting if Rob hasn't answered it by then. All right. So we'll start out with a question here from Will on YouTube. What's the best way to short bonds? Puts on TLT, calls on TBT?
Either one, because they're inverse and they're the same, and they're both pretty liquid. So whichever you prefer. Interesting that you want to short bonds, but probably smart. Maybe, well, it depends on whether we go a little bit lower first, but that's going to be an amazing trade once this downward move in the markets finishes out. And so if it can power higher than the money moving from equities into bonds, then you're there. So I really like the trade. I don't know if I like it today. Might kind of want to see, although I shouldn't say that because the futures are up 14 now, 13. So, I mean, it may be a great trade for tomorrow, a day trade. But I think as far as an extended period, we kind of want to let this downward move play itself out. But I get what you're asking, and I can't really tell you one above the other. They're both pretty liquid, and either of the two scenarios works. Maybe you do like a half a position in each, but it should work on either one. Really good question.
Yeah, that was an interesting one indeed. So we'll transition over to our Zoom Q&A, and Cam has a question here on PDD. Just would like your thoughts.
Sorry, what was the symbol?
PDD, Delta
PDD.
Delta.
Okay, yeah. I always try to pronounce this Pinduoduo. I never get it right. I mean, they talk about it and it seems to come out good, but I can never pronounce it properly. So pretty nice move there. I understand why you want to see this, but it's a little vertical now. And, you know, I get nervous when things go vertically up because often they come right back down, but not much of a give back today. But see the significance on how overbought we are. So if you were in this, congratulations, you did extremely well. From this point, though, I would want to see it break above 70. If it does, I think you have another great trade. If it can break above 70, then you're probably filling that gap at 80, and there really isn't much resistance there other than the gap. The next major resistance is at 90, but you're overbought right now, really hard to get in now. So as far as your loss, if you're in it, you want to see it hold 60. So if you're in this, as long as it can hold 60, you're good, stay long. If you're looking to enter, I just feel like you want to just be a tiny bit patient here, let it get above 70, because you probably have a pretty good shot of it hitting 90. So that's what I see there. Nice base at 50, broke above it, clean break above 60. So yeah, pretty interesting chart there.
Yes, indeed. All right. Thanks, Rob. We'll go back over to YouTube here. And SSH says SCHG, if possible, growth ETF.
SCHG? Is that it? SCHG? Okay. Is that a sneeze? Bless you if it was a sneeze.
I actually hit my fan next to my laptop.
Okay.
Was wondering if you're going to comment on that.
Yeah, it was an odd sounding noise. All right, so Schwab large cap, and we went up to a perfect 50% wave 4, also with a doji. Remember how many dojis there are at that wave 4 peak. Before we started lower, I don't see how it doesn't come down to 60. And the only question is, do we bounce a little bit first? We could bounce up to 65, which if you were looking for a short, let it get to 65 and then trade it down to 60. We're a tiny bit oversold right now, but the key is going to be, can it hold 60? And there is a lot of support there. So the markets may be getting down to areas where they can find some short-term support, but we are about to move into September. And as we talked about last week, September is one of the 2 worst historical performing months of the year. And that doesn't mean every single year May and September are bad. It's just over the average of time, May and September have been the 2 worst performing months. So we're not going into a seasonally bullish time right now. So that would factor in on whether it can hold 60 or not. This is going to kind of coincide with what happens on the diamonds with the large caps. But I think if you get a bounce to 65, you probably have a pretty good entry on a short down to 60. If it could somehow bounce above 65, which is where resistance is now, then you got a good bullish trade up to 70. But it's got to get above 65 first. If it can do that, you know, you change, you flip the script. We talk about adjustments at ewotrader.com a lot, because if the chart changes, change with it. Don't stay stubborn in your thesis. If the chart changes, go with it. Make an adjustment. What's wrong with that? You know, if the chart changes, change along with it. So that's what I see there.
All righty. Thanks, Rob. Another question here from YouTube, from Earth. What wave data can you see in Weber? W-E-B-R.
W-E-B-R?
Correct.
Is this the grills? Not sure. But looking at, it's got a ton of support right here at 8. So if it can hold 8, I think you get another bounce up. So you're looking for the lower dollar stuff. This might be good, because right now you had a big, huge sell-off today. way overdone, and you're right at a massive level of support. So if you're looking to go long here, as long as it stays above 8, you can take a shot for a bounce back up. It tried, you know, what, 4 times here to get above 10, and it couldn't do it. And that's because there's massive support there. So the shorts are coming in and pushing it back down every time you get to 10. But you're back down at a ton of support. It may get it back up. If it doesn't hold 8, it's going to 7, and there's a lot more support there. So if you're willing to accept a little bit of red on the trade, if it breaks 8 and you want to stay long, you can hold it down to 7. But just know that if it breaks 8, it's probably going down to 7 in a very short period of time. But if you're looking for a long trade, you could take a shot now on a speculative trade and see if it can hold 8 and bounce back up to 10 again. It looks like it may very well do that to me. We'll see.
Yeah, yes, it does. And I was going to say, you were right, it's the grills company. And we had a subscriber write in saying that it's falls in that meme stock category.
Yeah, I can see that. And it's, yeah, it makes sense. They're good grills. If it was the grill, they're very good grills.
Been around for a while. They declared bankruptcy in 2004, but it looks like they made a comeback here. Well, acquired some assets from competitor Duquesne at a bankruptcy sale, actually, to confirm that. Anyways, back to the questions. We have a question here from Felicia. Thoughts on UEC?
UEC. Oh, coming up with, oh, uranium. This will be good to look at this. Coming up with some interesting symbols tonight. I think this is really interesting with everything that's going on globally right now. You can see this bit of a doji here, which would imply potential move higher from here, but let it happen. If it can get above 4.5, you could see it back up to 6.5. You could see it retesting those highs in a very short period of time, but let it do it. Don't jump in too early on this one, but you may have something here if you're looking for a quick move to the upside there. So 4.5 up to 6.5, that's, you're looking at what, 40% move, over 40% move potentially here. So I would, I would let it get above 4.5, and that would then be your stop on any potential move lower. But you probably have a decent chance of that running back up to 6.5 as well. So pretty interesting there. Just be careful. It's got to get above 4.5 first. And the reason I say that, if it doesn't and it falls back down, well, then it's 3.5 in a short period of time. So, exercise some patience. If you're going to play in this space, and I know a lot of you like to do it, be patient. Let them come to you. The moves can be great, but as you've seen through all the headlines, people can get destroyed on these as well. So just be smart and patient, and then you can do well playing in this space.
Yes, indeed. Next up, we have Jay from YouTube. A couple of symbols for you. First one being SPCB.
Super calm. What a great name. Oh, wow. Ultra meme space here, 30 cents. Bounced off of the support. 30 cents is massive support. So here I'm going to come in with the caution again. I know that was a nice move today, but there's a ton of resistance here at, almost said a bad word, at 35 cents. So let it get above there. If it does, you know where it can go. I mean, you're looking at the charts. That's why you guys look at these things, because you see where they've been and you have visions of them going there. Know that we do not have the liquidity in the market that we had back then in this meme space. It is a different world. Some of these will still work. It doesn't mean that none of these micro caps are going to work just because we don't have as much liquidity, but it means that you're not going to have as many of them with as big of moves. There's going to be fewer of them. The moves are going to be smaller, but you can still find one and get it right. But I just go back to encouraging patience and be smart on these. Your stop here is obviously 30 cents, but I wouldn't do anything with it until it got above 35. And if it does, then maybe it runs up. Maybe you get another one of these big spike days up to 45. That could easily happen. But to me, it's got to get above 35 cents first on that one.
We will surely have to find out. I got another one here for you, and that is PACV.
CV?
CV, correct.
V as in Victor?
Yep, you got it.
Don't know that we have that one.
Yeah, that one might be
that one may be too small. PACV, correct?
That is the one. Yep. So doesn't look like that one's made it on to the data there.
That one may be a really small one.
Yeah, more than likely. So we'll go back over to Zoom. A question here from Bob. Continued thoughts and prayers to you and your family, Rob. What are your thoughts on URNM? If bullish, would you wait for a return to the 10-day moving average?
URNM. So there's another uranium play, two uranium plays tonight. Really interesting. And they're in a good space. And I really think that this is going to be a good place to be moving forward. I really do. But now you're a tiny bit overbought and you're at resistance. If it breaks above, you be careful on this one. If it breaks above 80 tomorrow, it's still going to be a little bit overbought and it might not hold. That's what happens when you break resistance and you're overbought. That's why I show this 10-day moving average so often. You want it to be closer. What you would like on this is let it go sideways a couple days here right at 80 and let the 10-day moving average catch up. And then if it breaks above 80, then you're gold up to 95 again. It's easily going to go there. And if it goes to 95, it probably goes to 100, but you're a little bit overbought. And I'd be nervous even if I said, let it get above 80 and it did that tomorrow, it would be getting above 80 in an overbought scenario and it might pull back down. So if you can get this, the market, as I say, rarely does exactly what you want it to do or what's ideal. But would be ideal here is let it go sideways at 80 a couple days, let the 10-day moving average catch up, and then as it breaks above 80, boom, there's your entry, and you're good to go on the long run to the upside. Thank you for your thoughts. I'll further that as we wrap up here in a minute. So let's do a couple more if you have them.
Sounds great. Yeah. Oh yeah. There's always plenty. So there's been a few requests for the semis for SMH.
Okay. All right. That makes sense. A lot of people look at that as market leaders and, it did okay with the bounce off the bottom, but as we know now, that was just a summertime bounce so far. And we're retracing that. Let's see what the volume looks like here. Below average volume. So, it's a double-edged sword though, isn't it? Because it means like the VIX hasn't really spiked. Volume hasn't really kicked in. If we go back, I'm going to backtrack here for a second and look at the volume on the S&P. You can see that we're just average or just below average, which means that this selling could continue. We're not blowing stuff out here. As far as massive volume to the downside to where you're putting in a bottom, it just doesn't feel like a bottom's been put into me. Even if we get a little bit of a oversold bounce here on the next day or so, seems like we need to have more volume and a bigger spike in the VIX to put a bottom in here to move higher. But looking at the semis, 220 is key, and we broke it today. And now we look to see, do we get, we had a little bit of a move lower there, technically breaking below it yesterday. So today would count as follow through. So it looks like the SMH wants to come down to 200. So it just doesn't feel like we're done going down yet. It really doesn't. We're a little bit oversold here. So some bounces, futures are up 12 at this point in time. So a little bit of a bounce higher here tomorrow would be warranted, but it wouldn't change the thesis. It holds it off a little bit, as long as you stay above 220, you could look to stay long there and hope it runs back to 240. But if it breaks any more below 220, then 200 is not far away. You can see this move here on how vertical the move up was from 200 to 220. It'll be just as vertical back down if we don't get back above 220 like soon, like within a day or two. All right, one more.
One more. All right. There's a couple requests from Juan for Coke.
KO. And you know, this shocks me just as much as the Dr. Pepper does. This is normally where money goes when the market is going lower. It hides in these defensive stocks, and beverage stocks are usually good for that. You look at Coke and you've got a massive ascending triangle here. And as I talk about all the time, that doesn't mean a break to the upside. And there you go, clearly breaking to the downside. Now it does look like on the positive side, there's some support here right at 62, which is where it's trading. So perhaps it tries to hold there. It's a tiny bit oversold. So maybe we hold here and try to bounce back up to the 10-day moving average. But if we break below 62, then we're back down at 59, which is a pretty significant move lower down to 59. So that's what it looks like there. All right, with that, we're going to wrap things up. And you know how I always sign off with, we appreciate very much you spending some of your valuable time with us. Time's the most valuable asset we all have. Thank you so much over the last couple of weeks for your thoughts and prayers. My mom did pass away last night, but I just felt like with everything going on in the markets that I needed to be here to share some insights with you. Schedule could be a little bit iffy here over the next week or two with all the things going on with family, funeral arrangements, etc. But I just felt like I had the opportunity to be here tonight, and I wanted to be here with you. And so it's a glaring example of how valuable our time is. And hopefully you feel that when you devote it to us, we make it an informative and educational use of your time. And we really do our best to do that. Thanks to everybody. Again, appreciate all the well wishes. They're well received and appreciated. Thank you.